Good morning, everyone, and happy Friday. Today's markets aren't doing so great, so maybe not that happy of a Friday. The markets are down by about 6.2%, which is a massive drop. The global crypto market cap yesterday was at 1.15 trillion, and today it has lost $100 billion of that. The price of Bitcoin is now below 22,000, down 6% in the last 24 hours. Ethereum, which at one point was $2,000, is down to 1,750, and it's down by 5.14% in the last 24 hours. And you can see here that in the last 7 days, these cryptocurrencies have lost about 8 to 12% of its value. We did see 2 weeks before that the prices had increased by 10 to 15%, and we saw a massive rally, seeing the price of Bitcoin going up to about 25,000, but now it is standing below 22,000. And this is mainly attributed to the Fed minutes, whereby they said that they're going to continue increasing interest rates to tame inflation. Of course, this was announced yesterday or 2 days ago. However, I believe that the markets underreacted to this. And now, because inflation data is coming out from worldwide and it's showing higher than expected inflation, people are moving their money away from crypto into safer assets. Looking at the price of Bitcoin itself, it has broken below the $22,000 support level, and it's going down toward 20,000. This morning it was about 22,100. Now it has decreased even further to 21,938. And as I previously mentioned, this is mainly due to the fact that the Fed has increased interest rates and will continue increasing interest rates in order to tame inflation and in order to control inflation. What happens then is that obtaining funds through loans or any other credit facility becomes more expensive because, as we know, interest rates are what we pay for borrowing the money. So what happens then? What happens then is that traders tend to exit high-risk stocks such as tech stocks and cryptos, and they take that money and put it into blue chip stocks, bonds, and hard cash, and most of that goes into the dollar, whereby they can get higher interest from their interest-bearing accounts due to the increased interest rates. And I believe that a lot of people are moving money from crypto into cash because if we see here, the euro-dollar exchange rate, which was 1.02 3 days ago, or even 1.03, is now standing at 1. So there is parity between the euro and the dollar, which means that the dollar has strengthened in the last day, indicating that a lot of money is being poured into the dollar thereby. And not only that, the pound to dollar rate, which was about 1.27 2-3 months ago, it's now standing at 1.19. So it's not a fact that the euro and the pound are getting weaker, but that the dollar is getting significantly stronger due to inflation pressures and due to increasing interest rates. On to some news. A sharp drop in total value locked and decentralized app use preceded Avalanche's 16% correction. So, after an impressive 73% rally between July 13th and August 13th, and in 1 month, Avalanche went up by 73%, the token faced a 16% rejection from the $30.3 resistance level. And some analysts will try to pin the correction as a technical adjustment and something that is very normal in the markets. However, the network's total deposits and decentralized applications reflect worsening conditions for the platform and for the network. It's not only a technical adjustment, but there are other factors which are causing the price to decrease. So in 2 months, the current 85.4 million tokens is a sharp 40% cut and signals that investors have been withdrawing coins from the network's smart contracts applications, and they might be trading those for other cryptocurrencies, thereby decreasing its demand and pushing its prices down. So total value locked is down to 85.44. It peaked at 175 million on June 13, if you see here, followed by a steep decline, which is standing at almost half of what it was before. In dollar terms, the current $2.2 billion total value locked is the lowest number since September 2021. And this data seems seriously, but it only gets worse if we look at the competitors. The number of Avalanche network addresses interacting with the decentralized applications declined by 5% versus the previous month. In comparison, Ethereum posted a 4% increase and Polygon users gained 10%. So while AVAX is decreasing in terms of dApp use, its competitors Ethereum and Polygon have seen increases. Also, Avalanche's TVL has been hit the hardest compared to similar smart contract platforms, and the number of active addresses interacting with most dApps only surpassed 20,000 in one case. And this data should be a warning signals for investors betting on the automated blockchain execution solution, which means that if you have sort of like a blockchain execution solution in place and it executes at certain levels, you might face massive losses because TVL is lower than what it's expected and much lower than all-time highs. Polygon, on the other hand, as its competitor, racked up 12 dApps with 20,000 or more active addresses in the same time period. Comparatively, AVAX only gained 1. And the findings above suggest that Avalanche is losing ground versus competitors, and this adds further reason for the recent 16% sell-off. So AVAX is in a tricky spot. It's facing a lot of pressure. A lot of people are moving away from AVAX into its competitors. The data shows that people are trusting AVAX less and less, and they have to do something about it, because if not, it will cause a runaway effect and the prices will keep on decreasing and the sell-off will continue. On some other news, Tether hires accounting firm BDO Italia for stablecoin reserves and adds monthly reports. Tether Limited has announced that it's hired BDO as its new accounting firm with a brief to produce monthly attestation reports for its stablecoin USD's reserves. So these are merely attestation reports. It's not audit reports. And I think what Tether is doing is that they're trying to signal to the market that they're allowing a top 5 accounting firm to audit their balances, to audit their reserves, and to inflict trust into the community in order to make them believe that whatever Tether has in circulation is backed one-to-one in terms of cash and cash equivalents and other liquid assets. But these aren't audit reports. I don't think BDO is allowed to take a deep dive into Tether's books, and I think that audit reports would be a lot better, but monthly attestation reports I think are a step in the right direction, and I hope that they can convert these monthly attestation reports into actual audit reports where BDO is actually allowed to go in, dig deep, and provide accurate information in terms of what is sitting in Tether's reserves and how much is sitting in it. Having attestation reports don't add a lot of weight to ensuring that the reserves are there in terms of one-to-one backing, but at least it's something. So according to Tether's most recent report issued back in March, it holds about 86% of its reserves in cash and short-term deposits, which is already incredible. This value was around 40% a couple of months ago, but after a outcry and after a couple of fines, they're forced to get into more liquid assets. So 86% in cash and cash reserves or short-term deposits, 4.5% in corporate bonds. Hopefully these are AAA bonds, which are quite safe, and 3.8% in secured loans. 6% is in other investments, which it notes includes digital tokens. And I think that bottling everything in other investments isn't a good idea. I think that they should be more transparent. They should actually delineate what they actually have in that 6%, listing out every single investment they have. So why does this accounting ramp up matter? Well, Tether's reserves have been called into questions before. A lot of analysts and a lot of traders believe that Tether's tokens weren't back one-to-one. And with a massive 67.5 billion market cap, Tether has a lot to lose if the books aren't balanced. Also, Tether's move from quarterly to monthly reports could help increase retail investors' trust and improve its relationships with regulators as well. So I think that they are complying more and more with regulation, and it will give more trust to retail and institutional investors so that they can use Tether. But I believe that Tether will go into the next level and will become a staple stablecoin once they start allowing audits into their balances and into their reserves, as well as when they have almost 100% of the reserves in extremely liquid assets. So last year, Tether and its parent company Bitfinex paid a $18.5 million fine when an investigation by the New York Attorney General's office found that Tether's promise that its stablecoin was fully backed by US dollars was a lie. So in the past, up to last year, they were duping the people. They made people believe that their tokens were completely backed by US dollars and completely backed by extremely liquid assets, which wasn't the case, and they had to pay a massive fine. And since then, I think they have taken massive steps in order to make their balance sheet more liquid and the reserves more liquid in extension. And I think they're doing a good job. I just hope in the future that they can allow proper audits to take place so that we are more rest assured and that we can sleep soundly knowing that our USD tokens are sitting in our wallet safe and sound. And with that, we come to the end of today's video. Thank you very much for watching. If you enjoyed the video, please leave a like, hit the subscribe button, and share this video with your family and friends. Invest wisely, and cheers.